What is the best indicator of a stock market crash telling us right now? How many interest rate rises are coming? And finally, has ANZ shocked its number one doubter, Paul Rickard, with this report this morning? I'm Peter Switzer, he's Paul Rickard, and we're mad about money. Well, Paul, you've been asking me to find out what the best indicator of a stock market crash indicator is telling us. And that, of course, is the Citi bear market checklist. And it came out late in April, and I've found the analysis, and it's looking pretty good, Paul.
All right, why don't you go through it, Pete?
Yeah, so 7.5 out of the 18 indicators that they have on their checklist are saying you should be a little bit worried. But the bottom line is they always say if it's under 10, it's a buying opportunity. And so that's an interesting assessment given all the negativity we're seeing out there right now.
Well, there's so much negativity around, Peter, and a lot of recession talk coming out of the US, despite the indicators being pretty positive. So I think there's a lot priced into this, and a lot of people making comparisons back to 2001, but this ain't 2001. I did like when I was watching CNBC in the early hours of this morning, seeing Jim Cramer declare the bear market over. A big call, but Jim Cramer's been, he's one of the better analysts out there.
Yeah, without doubt. And what's also interesting, Paul, is one of the problems they're worried about is US inflation. The latest numbers kind of indicate it's starting to peak. And we're also seeing in China the problems there with its pandemic lockdowns. That's also showing some promising signs as well. So, it's going to take some time, but at least if you put the bear market checklist indicators together with what we're seeing anecdotally, I think it's still a buying opportunity to get into the stock market.
Yeah, well, that probably leaves a good segue into the RBA, Pete, because what's going to happen to interest rates?
Exactly right. And that was our next big issue. How many do you think the RBA is going to give this year? Bill Evans has got 6 out of the next 8 months, including the one we've just seen. But over the next 8 months, he sees 6 months of rises. Do you think this is a bit excessive, mate?
I think that's a bit excessive, and I think you've got to say the RBA. Look, I really like the headline in the Australian this morning, which bagged the RBA, right? And I think the RBA needs a bagging because yesterday's interest rate increase. Look, what a waste of time. Either you're serious about inflation, in which case bump the rates up, or you're not, and wait till the wage data comes out at the end of May. So this 0.25 increase yesterday, what a waste of space. It should either have been 0 or 0.4 as a minimum. So, RBA is wrong again. Look, I guess coming back to your question, Pete, the market economists, they want to see it higher. The market wants to see it higher. Markets love the volatility. I think we're probably going to be looking at a slightly more conservative RBA. So I think by the end of the year we'll be about 1%. So that's another 3 increases. I don't go with the school that says they're going to increase it every month by 0.25%, but we've been wrong before.
Yeah. Look, the only reason why that 1.5% cash rate would show up by the end of the year, and that's what Bill Evans is saying, is that things get so good. The Ukraine war ends really quickly. China gets back to producing normally. The Fed doesn't raise interest rates as rapidly as we expect and therefore keeps spooking people about recession. Put all that together, and the Reserve Bank might have to increase interest rates quickly because optimism will be so great. I don't think optimism is going to be that great that they will raise at that kind of rate. Eventually, we'll get to 1.5%, but it'll be in the context of a really improving economy, which I don't see happening for the next 3 to 4 months. And then I think we will start to see some improvement. But I think that's a big call, 1.5%. And we'll just keep our fingers crossed that you and I are right. And I bet a lot of people with home loans think we're going to be right as well. Finally, ANZ. Now, you've been the number one doubter of ANZ. You thought they were showing no sort of enterprise, no likelihood of increasing profits or whatever. What does this report say today?
Well, look, I mean, it's a bit of a yawn, Peter. I think the market's going to say it's a bit disappointing. But at a headline level, look, cash profit of $3.1 billion. That's up on the corresponding period in first half of last financial year, but it's actually down about $150 million on the last half coming up. So market, and it's largely notwithstanding they're still writing back bad debts. So there's a contribution, a positive contribution from the write back on bad debts. It's really worrying when you read the first few pages of a financial report from a major bank, and they're triumphing the fact that almost their housing loans, they just grew, and that they're as good as every other bank at processing a home loan. Well, hang on, where's the ANZ been in business the last 100 years? How hard is it to get a home loan right? This bank is asleep at the wheel. There needs to be change. It's time for the team to go at the ANZ. Market's going to say, report okay, but really a lot of NIM pressure still. Income actually fell during the period, so let's not get too carried away with this bank. And there's going to say prefer others. So I suspect the market's going to mark down ANZ today and say, look, we were right. We know that AMP's doing a lot better, but ANZ's in the basket case.
Sounds like still the bank's number one doubter, Paul.
Well, still am, Peter. I mean, look, when I say basket case, that's probably a little hard, but look, it really is a pedantic report and a pedantic performance from the ANZ team. So I think what this is showing, if you did take anything, is that the pressures on net interest margin are still there. That's why revenue fell. Also, Treasury and Markets income was down. So it's really tough for the banks. So they do need the higher interest rates to get their profitability back up. But ANZ also needs to work out how it's going to grow, how it's going to really drive costs down, and how it's going to change the way it works. And I can't see it happening under the current team. So I'm a doubter on ANZ. It's my least preferred of the four major banks.
He's Paul Rickard. I'm Peter Switzer, and we're mad about money.